Okay, so we're back again with another market review for gold on the 5 minute chart. And as always, first things first, what you want to do is you want to set your chart to the New York time. Reason being, we are using ICT strategies. To be specific, the ICT breaker. That's what I specialize in, and I use the 5 minute chart. Secondly, what you want to do is you want to make sure you put a line at 12 midnight and a line at 7 a.m. New York time. Reason being, everything on the left hand side of 7 a.m. is the London session, and then everything to the right of that is the New York session. Once you have that in place, you want to highlight the London high and you want to highlight the London low. You want to use different colors. The more you do this, you'll start to have your own colors for everything. Mine is for the high I use yellow, and for the low I use blue. Always, I'm just used to that. For breakers I use a white line, I draw it out into the future, and for fair value gaps I use the blank white block. Thirdly, what you want to do, once you've highlighted your high, your low, you've got your line that shows you 12 midnight, and you've got your line that shows you 7 a.m. New York time. You want to highlight anything that stands out from that session or the previous day. Reason being, you wanna highlight all these points of liquidity where price might draw to in any way, shape, or form. And so this was left from the previous day, which was Thursday. I drew that out into the future. I had it here at first. I had it here, but obviously as the session started and started to develop, I drew that out. And as I said, you want to draw out anything that stands out. A breaker, I drew that out because why? Price is going to use that as a draw on liquidity. And as I've said countless times before, price is using all these points like a mountain rock climber. It needs somewhere to step on. It needs somewhere to grab onto before it continues its trend, whichever way it's going. And it can ping pong. It can go in between and climb up and down, up and down. That's sweeping different points of liquidity. I digress. Let me continue. So then at 8:30 is where you're going to find your first trade. 99%, like 90% of the time. Your second trade is going to develop around 10:30, 90% of the time. But then that's going to take practice. You have to be able to see this, but I'm going to try and guide you as much as I can. And obviously, if you have more questions, just drop it down in the comment box. Between 7 and 11 a.m. New York time, you are looking for an opportunity. I am taking you a little bit more into a precise way and saying that around 8:30, you will find your first possible entry for the day. Your second entry usually develops around 10:30. But don't hold me down now and be specific with that exact time around those 2 points. I'm being broad when I say between 7 and 11. That's too broad. I'm narrowing it down for you just a little bit. And the more you practice to watch price action live, the more you're going to get used to it. So at 8:30, what happens here? Price wicks down here and goes all the way up. What do you think happened here? I'll tell you what happened. There was a break, and that was the only trade that I was a part of. Because why? I had reached my TP for the day, and that was enough for me. And now, you can also see that trade on my shorts. It's also on my TikTok. Wherever you are seeing this video, it's there. Just check the date, which was the 9th. Yeah, it's there. So let me draw that out for you on the actual candles so that you may practice this. And this is how I learned. So yeah, so we have a low, high, low, high, low, and then obviously breaking market structure. So doesn't look that good there. Let me draw it down. Low, high, lower low, and then breaking market structure. And then that little red candle there is the retracement, draw into that, and then we spike all the way up, going for liquidity. Was that random? No, it's a breaker. Obviously, you can't see it as cleanly on the 5-minute chart, but what happens when you go down to the 1-minute chart? Low, high, lower low, breaking market structure right there. And then what is this doing? It's retracing into that order block right there. Where's that order block? This is the whole order block right there. I was in this position, and That was quick, smooth, easy position for me because I know at 8:30, 90% of the time, price spikes in whichever the breaker has broken down to. Where did I put my stop loss? Right at the bottom, just below that low there. That's always where you want to put your stop loss. Don't try and be slick and put super tight stop losses. You will get hit, and that's the most annoying thing, to get hit and then be right because you were just trying to save. You have to take risk. Scared money don't make no money. So I had my TP here, but look at that. We wicked all the way to the London session high, you know. Still could have had a good move there, but then it was still a good move for me because I was 100% sure that we were going to reach that there. And then once we took out London session high, I can draw that in because why? Liquidity has touched there. So just to break this down a little bit more, how you could have entered. So once we broke above here, this candle here, this red candle, that lets me know that now I can use this as an order block. So as soon as price, it didn't even need to touch the base of the candle. As soon as it just wicks there, boom, I come in, I put my stop there, and I think I just put one big lot because I was so sure what was going to happen. Don't do that. Always go small, 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 but around that time it moves real quick. Sometimes it just wicks once and then it doesn't give you that chance again. As you see, it didn't. It just went once and it aimed for the London session high, and then we broke down. And then what happened here? So once we wicked up, we went high, we made a low, made a high, made a lower low. Let me draw that again for you, my bad. Went high, made a low, made a high, made a lower low. We had the second breaker. What time is this? Around where? Around 10:30 is your second move. And what do I mean? The retracement. See, so this just happened slightly before 10:30, but then if you understood that we are using breakers, so from 7 to 11, right here, you highlight this fair value gap. Price printed too fast. There was no buying that happened here. So then we have to come up, even if it's just a little bit. So we came up once, came up again in making a high. We took it out. We created another breaker. That for me, I don't know if that's a thing, but it usually lets me know that, okay, we're super bearish right now, so I can add another move and aim for some point of liquidity, which is, look at that. Look at, we hit a previous day low, and those are your perfect take profit zones. Your previous lows, your previous highs, your fair value gaps that have been left in the morning session or the previous day or the day before that. That's all you're doing every day, in and out. Don't get greedy. Don't try and aim for the impossible. We scalping, we day trading. So let's break that down again. So right here, there was another opportunity right here. You could have went short here, but then you need to understand how price works fractal. Why do I say we could have had another opportunity here? Because we took out a high. We've taken out liquidity. Every time we do that there, I'm always stalking to see if I can have another opportunity. We have a high, we have a low. This is on the 1 minute chart. This is where price is more fractal. So what do I mean by that? It's going to show you more. Over here, it just shows us that we're just extremely bearish, went down, retraced halfway into this bearish candle here, this bearish order block, and then continue to break down. But then if you are watching on the 1 minute chart and you are aware that we just swept liquidity, we broke down, made a high, broke down again, taking out this low, made a high, broke down again. And as I've said this repeatedly on the channel, on the 1 minute chart, you want to see price take out multiple lows at a key time if you are bearish. Time is so important. I'm not saying look for this anytime. No, time is so important. Specifically the New York session. You want to see price take out multiple lows or highs. If you're bullish and you want to see it take out multiple highs. And what do I mean by that? So here we are currently bearish. I want to see it take out at least 2 or 3 lows right now if I had to be bearish. That's 1. This is 2. Why? Hey, why is this a low? Because we printed down and then went up. This makes this a short-term low. We printed down here again. We printed down here and then we went up. This makes this another short-term low. We've taken that out. And then see what happens here. Let me just see what happens here. We create this order block right here. That's an order block. Or it's a breaker block. One of the two. We retrace. There's no fair value gap here, but what do we have? So I like to just use the candles. And I would have put in an entry just below that. Not by the wick, just below that. And then I would have had my stop. I would have had it probably here. Honestly, just to be safe. And I was going to put in a small move at first, and then as price breaks down, which it shows me here now on the 5-minute, now I know, okay, we're going to be bearish for a while. So what can I do? We create this high, create this low, create a high, break in market structure, fair value gap. We retrace 1, retrace 2. Man, I would have put another small move there, put my stop there. Put another small move there and put my stop there, and then the stop that I would have put here on the 1-minute chart, I was going to move it now to here. Because why? We have this break in market structure. We have this fair value gap. Price does not need to come all the way up here. It can, it may, but it does not need to. Using the strategy, we know we don't want to see it come up here. If it does come up here, then it's knocking us out. That's good. We are going the wrong way. That's cool. You will get it wrong sometimes. You will read it wrong sometimes. I do. But then you dust yourself and you learn. Again, there was another opportunity here. You could have added another small move. And this is how you add to your winners. So this is how you do that. Instead of you just trying to go big and swing for the bleachers, no. You go in nice and small. And the more it shows you your strategy working. So I'm showing you to add, but I'm also showing you that these are different points where you could have got into the trade as well. If you missed this one here on the 1-minute chart, you could have gotten in here. Cool. Could you and then you could have had your stop there. And then we had this other break, high, low, high, break in market structure, fair value gap right there. I would have entered again here, had my stop there. And what are you aiming for? You are aiming for the London session low or the previous day's low. We've taken out the low already. We are still going down. We've taken out the breaker and we've filled up this fair value gap, but we still have a previous day's low, which is right there for the taking. It just hit it. Like it just hit it. Hence why I'm saying never be greedy. Put it exactly there. If the low is 2002.1, don't go 2000 and so 2002.1. Don't then go 2020. Put it exactly there. Price is precise. It is precise. It's taking out lows, it's taking out highs, it's filling fair value gaps, it's using breakers, it's using order blocks. It's precise.